Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Friday, July 14th, 2023. Before we click through the charts, just want to encourage you to please click like, share, subscribe to the Wicked Stocks YouTube channel, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this: daily analysis in the SPY and the Triple Q, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near term investor, always looking for 20% moves on those underlying stocks. Check out wickedstocks.com. So let's jump to the charts. Weekly chart as usual. We'll work our way from the big picture into the day itself. We had a long-term buy signal 6-7 weeks ago when we settled above the 191.39 18-month channel top. That did indicate the possibility for 414.49, the November 21 high, possibly by the end of the year, but certainly over time. That seems to be the setup here. We have been snagged, if you will, have topped out at the 284.01 rising channel top, this weekly channel top that was considered, at the time, a 2 to 3 month, but possibly 3 to 5 week target, depending on volatility. We reached it in about 4 weeks. We've been topping out here for the better part of the last month. 284.01 is the weekly chart. If we close above 284.01 today, Friday, July 14th, it should be by a 1% margin for what I consider to be kind of buy signal clarity, technical clarity. If we close at 285, 286 even, that's just inside the 1% zone, and it does not present a clear-cut, reliable buy signal. But you can have at it if we close above 284.01, but it really is a settlement today at 286.85 or higher that would indicate longer-term bullish continuation. I'm expecting bullish continuation anyway. It's just that this formation may still contain buying through August trade, and from here we can fall back into the low 190s perhaps over the next couple of months. The signal for whether or not we fall back into the low 190s or not would be a settlement this week. Not going to happen below 247.96. This simple channel structure rising channel top at the top of a move, closing below 247.96 would aggressively pivot the market south. As we move into later August, within about 3 to 5 weeks, I would then expect the low 190s. So as we push into the mid 280s again, and we might do so today, you could perhaps reach for 250 out of the money puts that don't expire for at least several weeks, or 190, 195 out of the money puts that don't expire for at least several months. That is sort of the option trade to make as we're pushing against this meaningful resistance. But as I mentioned a moment ago, if we close today at 286.85 or higher, 1% beyond 284.01, I would expect within probably 2 to 3 weeks, this 313.60 to 314.66 region. This is kind of a triple top area back in August of last year, about a year ago almost. It can contain weekly buying pressures, but honestly, it would be the settlement above 284.01. I think that would accelerate bullish momentum, and I would see by the end of the year, more than likely within about 3 to 5 months, a testing of that 414.49 all-time high. And I think that is kind of what we could expect if we close today above 284.01 by a 1% margin. I think that kind of covers the big picture. Now for the day itself. Let me kind of comb through the charts and show you what I want to show you. And I'll start with this one here. 269.61, low settlement price. From about 4 days ago. I think that was a Monday. The Tuesday settlement was very similar following the pullback high. So I've upgraded 269.61 from an intraday to a session containment level. We came close to testing it actually on Thursday. It can contain session weakness. And if we close below 269.61, I do think by the end of next week, we could actually test this 251.74 rising channel bottom, which I showed a moment ago on the weekly chart at 247.96. So, continued settlements below 284.84, 284.01 on the weekly chart. We'll keep 251.74 in reach anyway over the next couple of weeks. Closing today below 269.61 should result in that by the end of next week, where at 251.74, we can bottom out on a weekly basis, possibly through the rest of July, and turn back up again. And as I mentioned a moment ago, it would be a settlement below 251.74, 247.96 on the weekly chart. That would signal this 190.32 rising channel bottom by the end of August, where we could bottom out really through the rest of the year, because that actually correlates well right now with this 191.39 long-term channel top. But I'm talking too far away from present price levels. Let's get back to, the day itself. And I don't show it here, but we did close above 176.93. That is an upside 5/8 Fibonacci over the last week and a half extremes. It is a level that can contain intraday weakness. So if we open today above 176.93, it is a intraday support level that can contain early day selling pressures, and above which I think the 284.01 to 284.84 region is likely again within the day, where once again we can top out not only through next week, but even through August activity, and from here continue south. And as I mentioned, if we close above 284.01 today by a 1% margin, in other words, if we close 286.85 or higher, no good reason to be short this market, whether it's for the next couple of weeks down to 247.96 or the next couple of months down to 190. In fact, under that scenario, I'll tell you right now, if we do close at 286.85 or higher, you could reach for 315 out of the money calls that don't expire for at least a month, or 415 out of the money calls that don't expire for at least 6 months. That would be the upside play. This is probably the upside play anyway, given our settlement a month and a half ago above 191.39. It's just that it'll be realized sooner than later if we close today 286.85 or higher. Once again, I'm going to go back to the day itself and show, I have trouble with my charts. There we are. If we happen to break 176.93 today or open below it, 269.61 in reach today, where a daily low can be placed. And if we settle today, once again, below 269.61, that pivots the market south into next week. Over the following 3 to 5 days, we could test this 251.74 channel bottom. And I think that pretty much sums it up for Friday's Tesla report. I'll be back Sunday afternoon with Mondays, and you have a great weekend. Check out wickedstocks.com.